The market hunted my stop loss. These brokers are rigging the game. The algorithms are out to get retail traders. Sound familiar? Every day, thousands of traders log off with the same story: the market screwed them over. Again. But here's the brutal truth that separates the 5% who make it from the 95% who don't. When you blame the market, you're handing over your power on a silver platter. You're basically saying, I have no control over my results. And that's exactly why you keep losing. Today, I'm exposing 11 hidden psychological traps that are the real reason you're struggling, traps your own mind sets for you every single trading day. More importantly, I'll show you exactly how to escape each one. By the end of this video, you'll never blame the market again. Because you'll finally see what's really been holding you back. Let me hit you with a reality check: the market doesn't know you exist. It doesn't care about your mortgage, your dreams, or your stop loss. It's completely neutral, just numbers on a screen responding to millions of participants. Your wins. That's on you. Your losses. Also on you. Success in trading isn't about outsmarting some imaginary enemy. It's about outsmarting yourself, your biases, your emotions, your unconscious patterns. Think of this video as a mirror. You might not like what you see at first, but once you recognize these traps, you can finally break free from them. Ready? Let's dive in. Trap number 1, outcome bias. I lost, so I must have traded badly. You think you're being logical by judging your trades based on whether they made money. Win equals good trade. Loss equals bad trade. Simple, right? Wrong. This trap makes you chase randomness instead of edge. You'll abandon profitable strategies after a few losses and adopt terrible habits that happened to work once. Here's the backfire: a perfect setup can lose money. A FOMO panic buy can make money. When you judge by outcome alone, you're training yourself to be inconsistent. The fix: rate every trade based on how well you followed your plan, not the P&L. Did you follow your rules? 10 out of 10. Broke your rules but made money? 2 out of 10. This rewires your brain to value process over luck. Trap number 2, loss aversion. I'll just wait for break-even. You believe you're being patient and disciplined by holding that losing position. It's not a loss until I close it, right? But here's what's really happening: your brain feels losses twice as intensely as gains. So you'll risk $1,000 more to avoid locking in a $500 loss. You'll cut winners at plus 100 but ride losers to minus 1,000. This psychological quirk, discovered by Kahneman and Tversky, is why amateur equity curves look like ski slopes. Pre-accept every loss before you enter. Write this down: I'm willing to lose X dollars on this trade. When you've already accepted the loss mentally, you won't fight reality when it happens. Trap number 3, gambler's fallacy. I've lost 5 times, I'm due for a win. After a losing streak, you're convinced the universe owes you a winner. So you double down, increase size, or take marginal setups because statistics are on your side. The market doesn't keep score. Each trade has independent probability. The roulette wheel doesn't remember the last spin, and neither does euro to US dollar. The backfire? You'll overtrade garbage setups and blow up faster trying to force the win that's due. Treat every setup like it's your first trade ever. No history, no streak, no score to settle. Just this setup, these conditions, this risk. Trap number 4, overconfidence bias. I'm on fire, time to size up. 3 wins in a row and suddenly you're the Wolf of Wall Street. You increase position size, take more trades, maybe even start giving advice in Discord servers. But confidence without competence is a death sentence in markets. That winning streak could be pure market conditions aligning with your style temporarily. When conditions shift, and they always do, your oversized positions turn small drawdowns into account killers. The fix: use a mechanical position sizing rule. Win or lose, your position size only changes based on account balance, not your feelings. Confidence is for closing, not for trading. Trap number 5, illusion of control. If I just watch harder, I can will this trade to work. You stare at every tick, moving your stop loss around like a chess piece, adding indicators, refreshing news feeds. You think more effort equals more control. Reality check, you control exactly 3 things: your entry, your stop, and your target. Everything else is noise. This illusion makes you overtrade, micromanage, and exhaust yourself fighting battles you can't win. It's like trying to push a river upstream. The fix: set your trade and walk away. Literally. The market will do what it does whether you're watching or not. Check back at predetermined times only. Trap number 6, impulsivity trap. I'm bored, let me find something to trade. You think you're being productive by always having positions on. Empty chart. That's wasted opportunity. So you manufacture trades from thin air. But trading from boredom is like eating when you're not hungry, you're consuming junk that makes you sick. These impulse trades have no edge, no plan, just action for action's sake. The fix: create a boredom protocol. When you feel the itch to trade nothing, have a list of productive alternatives, backtest, journal review, education. Transform destructive impulses into skill building. Trap number 7, confirmation bias. See. That news article agrees with my position. Once you're in a trade, suddenly every piece of information magically supports your bias. Bearish news during your long. Must be fake. Bullish divergence during your short. Probably a trap. You think you're doing research, but you're actually cherry-picking evidence like a conspiracy theorist. Your brain literally filters out information that threatens your position. This tunnel vision prevents you from adapting when conditions change. You'll ride trades into the ground clutching outdated analysis. The fix: before entering any trade, write down 3 things that would invalidate your thesis. Check for these actively. Seek evidence you're wrong, not right. Trap number 8, anchoring bias. It was $50 last week, it has to go back. You fixate on arbitrary price levels, your entry, recent highs, round numbers, as if they're magnetic. Gold can't break 2,000. This stock always bounces at 75. But the market doesn't care about your reference points. Price is discovering value in real time, not reverting to your mental anchors. This bias makes you hold losers too long waiting for your price and miss entries waiting for better levels that never come. The fix: cover up your entry price after entering. Trade what you see now, not what happened before. Past prices are historical artifacts, not future predictors. Trap number 9, FOMO trap. Everyone's making money except me. You see a coin up 50%, a stock squeezing, traders posting gains. Your disciplined plan suddenly feels like a straitjacket. So you chase, buying tops, selling bottoms, always one step behind. FOMO trades have the worst risk-reward ratios. You're buying after the move, with undefined risk, hoping for scraps. It's like joining a party at 3 a.m. wondering why the drinks are gone. The fix: calculate the opportunity cost of discipline. Every FOMO trade you skip saves capital for your actual setups. Make a FOMO jar, put $1 in every time you resist chasing. Watch it grow. Trap number 10, revenge trading. I'll get my money back from this market. You just took a loss and now it's personal. The market owes you, and you're going to take back what's yours. Double position size, aggressive entries, throwing rules out the window. But the market isn't your enemy, it's your dance partner. When you trade angry, you're stepping on everyone's toes, including your own. Revenge trading compounds losses exponentially. One bad trade becomes 5. A bad day becomes a bad month. Professionals know this and step away. The fix: institute a 2-strike rule. 2 losses equals mandatory break. Go for a walk, hit the gym, do anything except trade. Clarity returns when cortisol drops. Trap number 11, sunk cost fallacy. I'm already down this much, might as well hold. You won't close that underwater position because you've invested too much to quit now. Like staying in a bad movie because you paid for the ticket. Every moment you hold a trade, you're making a new decision. The market doesn't know or care what you paid. Holding losers hoping to get your money's worth just digs deeper holes. The fix: ask yourself, would I enter this trade right now at current price? If no, get out. Your entry price is irrelevant. Only future probability matters. Here's what separates amateurs from professionals. Amateurs think their failures are bad luck, market manipulation, or broker conspiracies. Professionals know failures come from unconscious patterns, these very traps we just exposed. The market isn't hunting your stops. It's revealing your weaknesses. The market isn't rigged against you. It's teaching you discipline. The market isn't your enemy. It's your mirror. When you blame external forces, you stay stuck. When you own your psychology, you evolve. Amateur traders are victims, the market did this to me. Professional traders are owners, I did this. Here's how I'll fix it. Which one are you choosing to be? Every time you catch yourself saying the market followed by any complaint, stop. Reframe it, my decision to. Because that's where your power lives, in owning your choices. We just exposed 11 psychological traps that sabotage traders every single day. These aren't market problems, they're mental patterns. And unlike market movements, these you can control. Remember. Outcome bias keeps you chasing randomness. Loss aversion makes you hold losers and cut winners. Gambler's fallacy has you forcing trades. Every other trap compounds these errors. But now you see them. And when you see the trap, you can avoid it. The market was never your enemy. Your untrained psychology was. Master these 11 areas, and watch how rigged markets suddenly become profitable playgrounds. Because when you stop blaming the market, your growth trajectory changes forever. The market is your teacher. Are you finally ready to learn? Which trap hits closest to home for you? Drop it in the comments below. I read every single one and love seeing these breakthrough moments. If this opened your eyes, subscribe and hit the bell. We're just scratching the surface of trading psychology, and the next video might be the one that changes everything for you. Remember, trade the process, not the outcome. See you in the next one.